Hey everyone, and thanks for joining me. My name is Matt, and if you're interested in starting to invest in the stock market, this is a great place to start. So, before we start talking about investing, there's a few things that we need to talk about first. So, first things first, investing is not a game. It's a real life situation using real money put into play. So understand going into this that this is simply not a game, and it's really not the place to be playing around with. At some point, you will lose money in the stock market. Now, whether you sell out of that position and lose money or ride it out, that's up to you. But know that this is not a consistent upward trend. There will be times where the stock market is volatile, like now, and you will see dips in your portfolio. Investing is not a get-rich-quick scheme, and don't let anybody tell you that it is, because investing needs to have a strategy in place, and for most investors, this is something that's going to take time for you to build a substantial portfolio. Some people have gotten rich quick, absolutely, but those are the unicorns, and it doesn't happen all the time, so don't give yourself the expectation that you'll start today and by the end of the week you will be rich. And if you have a lot of debt, don't start investing yet. Or if you're struggling financially, this is not the place to start and try to recover your debts or help yourself financially. Because again, there will be times where you lose money. And if you need the money, you're better off putting it in a safer investment, like a high yield savings account where you have access to it and where the returns are more steady than what you'll see in the stock market. So unfortunately, you do hear people say often that they invest and they use that to pay off their student loans or their house or anything along those lines. For the long term, investing can be a great strategy for saving money, but it shouldn't be something that you're using for your short-term solutions. And lastly, before you get started, you need to educate yourself. You need to know what you're getting into, and by watching videos like this, you've already started on that right path. But it doesn't just start and end with watching a few videos. Learning about the market is something that you need to be doing on an ongoing basis because it's always something different every day. And I don't say this to scare you, I just say this to be realistic when it comes to investing. It bothers me when you hear people out there that say, oh, start today, it's real easy, you'll learn it real quick, I have zero education on it and I made $3,000 today. Again, don't listen to that. Educate yourself and just do what you can to know exactly what you're getting into. So, steps for investing. The first step is always just to know why you're investing. Are you saving for something? Do you have a lot of cash that you need to put to work for you? Are you looking to have income producing investments? These are all things that you need to take into consideration before starting. Even things like retirement, college savings funds for children, buying a new car. Anything like that is a strategy to have for investing, but you just need to have that in place before you put the money to work. And most importantly, to make a lot of money is not a why. When I worked in finance, I always talked to people and would say, kind of the way I would gauge their level of interest, commitment, and what have you when it comes to investing, is I would ask them, what are your goals with this money and what do you expect to get out of this investment? And I can't tell you how many times they would answer, and this would be people from 20 years old to 70 years old, would tell me, I want to make a lot of money and I don't want to lose any of it. We all do. That's not a realistic strategy, and honestly when somebody would tell me that, I didn't care how old they were, how much experience they had investing, I would have to tell them, that's not a real strategy, and if you're not ready for this conversation, I'll gladly give you a call back once you've thought about it. But until then, I need to know why you're investing. Sounds a little harsh, but it's the honest truth, and I never felt comfortable letting somebody proceed with an investment until they knew exactly why they felt that was a good investment. Educate yourself, and educate yourself wisely. Again, it's going to be so important for you to know exactly why you're investing, what everything means, what the different positions you have are, and just listening to other people's investments and following along with what they're doing is not the solution. You need to do the education for yourself because everybody's going to have different portfolios, everybody's going to have different goals, strategies, risk tolerance, anything. that's going to make it different. So just mirroring what somebody else is doing is not a way of educating yourself. Learn the lingo. There's so many different terms out there, and if you've seen one of my previous videos, you know I say investing is intentionally complicated because people make money off your ignorance. So it's not hard, it's not easy though. It just takes time, and you need to know what people are saying. You need to know what these crazy words like a PE ratio or moving averages means so that you can become a successful investor. And I'll make a video too following up with that with different lingo terms that you'll need to know and just the basics to really help make sure that you are as successful as possible, and then that way you can use those different terms for your advantage. And create a strategy. Again, this is similar to knowing why you're investing. So before you start investing, you need to have the strategy in place. How much cash are we going to start off with? How much cash are you going to keep in reserves? When are you going to exit the market and sell out of these positions? When are you going to buy these positions? These are all very important things for investing and will help make sure that you have the best chances at investment success. And last but not least here, start with paper trading. Now, paper trading, if you're not familiar, is simply just a way, it's like a mock simulator of the market. For the most part, they're pretty up to date. They might lag in times a little bit, but it gives you a great opportunity to use not real money, investing in the market, and just seeing how you do. If this is your first time investing, I wouldn't consider putting real money into the market until you've done this and feel comfortable with the trading. And even as you have money in the market, I still to this day play around with paper trading because it allows for me to try out different strategies. I can try different ratios, see what works the best for me and my investment strategy. So I can see the difference between a 50-day moving average versus a 200-day moving average. And just knowing that and having the ability to practice that without real money is going to be so beneficial for you in the long run. And that you can use as a game. You can be as risky as you want, you can be as conservative as you want, you can invest everything in one position. It doesn't matter because it's not real money and you can see how it plays out for you. I guess once you have all that done, then you can go ahead and open up your account and put your real money into it. Now for the education aspects. You need to learn, and again, as I mentioned previously, learning is something that just doesn't stop once you get started. It's an ongoing thing because the market is always changing. One of my favorite ways for educating myself is with podcasts, and the two specific ones that I listen to are Motley Fool Money and Market Foolery. I misspelled foolery, but they're both from the Motley Fool, and it's just really good information out there. I think they do a great job with talking about stocks in a realistic way of investing. They don't day trade, which I like. They have a very similar investing strategy to what I'm interested in, and it's just a unique way to learn about the market and hearing it from somebody that you can trust. These are all professionals. Some of them have their CFA. One of them is the CFO or CFI, CIF, whatever it is, of the Motley Fool. And so you know that the information you're getting is accurate. Unfortunately, with investing, there's a lot of room for opinions. Nothing's ever really going to be black and white for you. It's an entire gray area when it comes to investing. So finding somebody that you can trust, you like their style, your styles match up, and you find it entertaining is going to be a great way for you to learn. The next way for you to learn is with Investopedia. When I was studying for the Series 7, or even when I was talking to clients, if I ever had any questions, Investopedia was my go-to because they have information on everything from stocks, real estate, bonds, CDs, treasuries, whatever you are interested in. Investopedia has great information and they do an excellent job of just putting it into layman's terms. So it's Investopedia.com, and if you ever have any questions on how to calculate certain ratios, what something means, definitions, anything like that, I highly suggest checking Investopedia first to see if that gives you the answer because the information they have is always going to be accurate. Also too, Investopedia is what I use for my paper trading. They have different levels you can get into, so you'll start off as a beginner with just the bare bones investing, and then you can work your way up into more advanced trading, so using leverage on margin accounts or options trading. So it's a great resource for learning and for trying out the market with the simulator. Yahoo Finance is another great place for you to learn about investments. They have great information, it's completely free, and it's just laid out well. You know, there's other sites out there for you to get this information, like MarketWatch or other information sites out there. I've always used Yahoo Finance in college when I studied finance. All my professors used Yahoo Finance, and all of our projects that we had to do for calculations, getting past data, and all that good stuff, all had to come from Yahoo Finance. So it's a great resource, and it's trusted by the universities, people that have their doctorates in finance, and even your small investors like myself. And that's finance.yahoo.com. Listening to earnings reports and earnings calls is huge. Now, it's not the most exciting thing, and I can admit that, but if you're investing in individual stocks, this is going to be a very crucial thing for you to listen to. Because what it is you get to hear the company's board, sometimes the CEO, talking about the company. You learn about who's on the board, what decisions they're making, how they're performing, their strategies, the whys on why they're making different adjustments to the company, and ultimately it gives you a look into where the company's heading. To me, these calls and reports are as close as you can get to looking into a crystal ball as possible, because you're hearing it right from the company himself on what their plan is moving forward. And as an investor, you really need to know what their plan is so you can see if it's in line with what you're considering. If you hear that they're doing some pretty aggressive plans of acquiring multiple companies over the next quarter, and you're not an aggressive investor, might be the time to exit that position, or it might be the time to get into that position. But listening to the earnings calls is a huge way for you to learn about different investments. StockTwits.com is another resource that I use for learning about investing. Now, I like StockTwits.com because you could basically think of it as like the Twitter for stock markets. So it's just a community that people have where you can learn about different investments. People post their opinions about it, the charts, the numbers, where they got it from, and if they think it's a good investment or not. You can join different communities for different investing styles. And so I do believe that it's a big part of investing is to hear other people's point of views, take in other investing styles, because you never know what you're going to learn. Of course, as always, take it with a grain of salt and kind of approach it with caution, because not everyone's an expert. But when you hear so many different opinions, you can pick out, as you start to learn, you'll know who knows what they're talking about and who is just blowing smoke. So StockTwits is a great place for you to be social with investing and engage with people that are interested in investing or are looking at the same companies that you're considering. So my tips is, not everyone is an expert, so don't trust everything that you hear. And that is really just so important, because especially now with the market going up and down, being very volatile, so many people are making videos like this and are just giving the information that they have, and it's a lot of times, unfortunately from what I've seen, it's just simply not correct. And they think that because they made $1,000 in the past week with investing in the market, that all of a sudden they're an expert. It's not always the case, and just be weary of who you listen to. There's a pretty big guy that does pizza reviews out there that's doing day trading, and love the company, and I love his videos, but he is not a knowledgeable investor. I've watched his videos on his day trading, and it's hard for me to watch because I understand the following that he has, and so for me to know that he's throwing out this bad information to that many people out there is intimidating. It's not intimidating to me because I don't listen to it, but it scares me and frightens me a little bit that people are listening to this and thinking that this is real financial advice. What he's saying is not financial advice. What people out there are saying should not be financial advice unless you're speaking specifically to a certified financial planner. Also though, I should mention, if I haven't already, is that I am licensed. I have my Series 7. I'll leave a link for my broker check down below if you want to just double check all of that. I'm not saying I'm an expert when it comes to investing, but I am saying I'm knowledgeable when it comes to investing. So I'm here just to help you learn with investing. I'm not here to tell you what to do or how to, which stocks you need to buy. Just helping you creating the plan and having a good understanding of investing before you get started. My other tip though, jumped ahead there, my bad. Analyst ratings are irrelevant. To me, analyst ratings are essentially just the headlines of the stock market. They're not important though, because the analyst rating might not agree with your portfolio. They might say this is a great time to buy, you need to buy, but your portfolio is doing well with what you're looking for. If they're saying, go ahead and buy these growth stocks, but you're really looking for income producers, then don't listen to what they have to say, because it's not about your portfolio. That's just based on their research, if they think they found a good buy. And again, it's more of like the buzzwordy headlines of stock investing. So don't pay attention to those, or don't really use that as your decision maker for if you're going to buy or sell a stock position. You should never put more than 25% of your portfolio into one position as well. Now, this one, again, up to you with what you do. This is just my theory, because I think if you put more than a quarter of your investments into one position, you have too much focus in one area and you're not diversified. So yeah, you could put all that into Google or Amazon and odds are you'll be okay, but you could be missing out on other opportunities for investing. So just taking that into consideration, maybe a good strategy would be 75% is relatively safe investments, but divvied up amongst other investments. And then sure, take on a little risk if you want in your portfolio, but if you have some aggressive investments, that should really only be a small portion of your portfolio. Otherwise, a lot of times your emotions will get in the way and they'll make you start reacting to your account in ways that you really should not be. And invest in what you know. Now, this might be an obvious one, might not make any sense, but what I mean by that is just invest in companies that you know and are familiar with. If you use Amazon all the time, love their Prime member, all of that stuff, it's expensive relatively, but it's a good company, and so that's something that you might want to invest in. Maybe a cheaper example of that would be like the McCormick Spice Company. I know when I go to a grocery store, regardless which one I go to, McCormick spices are always on the shelves. Whether it's just their black pepper, their Montreal steak seasoning, it's this company that you see everywhere. And they don't have that much competition other than like generic brands or like bougie spices. So I would just, that's one that I invest in, one that I like. I'm not saying it's one that you would like, but it's something that I know that I'm familiar with. Another example of that is Ecolab. I've worked in restaurants in the past and every single one of them had Ecolab for their commercial cleaner. I looked it up to see who their competition was and there wasn't much competition. So I bought the company and that's actually ended up being one of my favorite positions and one that I've held on to since I've started and just continually buy more and reinvest dividends and all that into it so that I can really expand on that position because it's done so well for me. And again, it's one that I know about and it's one that I just simply understand. I hope that was helpful for you today. It was a pretty quick video, but my goal here is not to give you advice or anything along those lines. It's to help you learn so that you can become more strategic or just a more well-informed investor. If you have any questions for me, always leave those in the comments down below. I'm happy to help any way I can. If you like this video, you can like it if you want, and if you want to subscribe for my updates and as we move along in my stock course, I guess you could say, feel free to subscribe. But what I'll do from here is I'm just making a series of videos to help you learn about it. The next one I'll do is going to be more on terms, so specifically on placing orders terms, and we'll just take it from there and we'll just build a series on about this so again you can become a more informed investor and make better decisions. As always, thank you so much for your time today. You could be anywhere in the world and you chose to be right here with me, so I really appreciate that. Have a great rest of your day, wash your hands, and stay healthy.